Hey everyone, this is Jeremy Stebbins, loan officer with Guild Mortgage Company, and thanks for clicking on my video and joining for this presentation. This is my first time home buyer webinar titled First Home Fast, and it's my to the point guide really for anybody who's never bought a home before, in particular going over the mortgage process and the financing process, but really all parts of buying a home. And the goal here is to do this well and also do it fast, because I think your time is valuable, your attention is valuable, and let's be honest, there's a lot that goes into a mortgage, but it isn't rocket science. And so if you have additional questions that this video didn't answer, please contact me and we'll talk about it. I'd be more than happy to discuss it. But the goal here is to be kind of on the brief side of things and have this kind of be a really compact presentation. So with that being said, we'll move forward here. And just a disclaimer, I cannot guarantee the timeliness or accuracy of all the information being presented today. That's for a variety of reasons. We all know that markets change. We know that banks change, guidelines change, but this presentation is intended to help inform you based on what the current conditions of the market are, what the current process for applying for a mortgage is, but that could always change. So what's on today's agenda? First of all, why buy instead of rent? That's important. Getting ready to buy a home, buying your home, getting your mortgage, and of course closing on your home loan. And jumping right into it, why buy instead of rent? Three really primary reasons. One, stop paying the landlord, because when you pay the landlord on rent, you don't get any of that money back in return. It's not really an investment financially, because waiting is probably not in your favor. I did put probably there, and I'll explain that here in a minute. And it's easier than you think, with low down payment programs, with down payment assistance, with kind of a variety of resources at your fingertips that you might not know about. Buying your first home is easier than you think. And truthfully, there are a lot of reasons beyond those, and we'll hit on some of those as we go on. Okay, so for this first section on why buy instead of rent, I'm going to detour here to my ebook, Jeremy's 8.5 Minute Mortgage ebook and video guide. So I did that out of convenience. I've already kind of assembled a lot of this information. So if you would like a copy of this ebook, please let me know. I'd be happy to send you a digital copy of it. But we're just going to look at a few pages here to kind of help answer this question. Okay, on the left-hand side, you can ignore that. That's just a little introduction on the ebook. However, on the right-hand side, renting versus buying. A lot of first-time home buyers right now, they say, well, shouldn't I wait until rates get lower or prices come down, or so on and so forth? Well, the answer to that is maybe, depending on your situation. But looking at even a conservative comparison on renting versus buying, over a 7-year period in Colorado Springs, it would appear that buyers stand to benefit, roughly $58,000, in the black positive if they decide to buy now instead of rent. It is kind of a complicated equation, because when you buy, you typically have, in some cases, you have to put more money up front than renting, but not always. You have to factor in appreciation and average rent increases and inflation and things like that. And for more on that, you can see on this next page how we got those numbers, calculating median home value in Colorado Springs, average rent for that median home, average national rent increases, typical appreciation, typical inflation, how much do you have to spend on property taxes, home insurance, maintenance. And when you factor all those things, when you pull all these numbers together, it would suggest that you do save in a 7-year period, primarily due to that debt pay down and potential appreciation. On the next page over with that white graph, this is where I'm talking about, hey, is there a hypothetical cost of waiting? And I think hypothetical is the right word, and I'll explain why. This graph here goes over median home price values in Colorado Springs from 1980 to 2024, where we see all the way at the bottom left corner, that's where prices were under $100,000 on average in the early 80s versus where they are now, which is well over $400,000. And this would suggest that if you do wait, there is a strong chance, and 44 years of recent history or more, that would suggest the price of that home is going to continue to go up if you wait. Of course, this is not necessarily guaranteed to be true. Anytime you invest your money, whether that's real estate or the stock market, you are taking a risk. It is possible that home prices will go down. But I think it's fair to say there's a hypothetical cost of waiting. If you decide not to buy, there are risks associated with that as well, and you should be informed on that. So next over, I talk a little bit about house hacking on that left-hand side, and that is basically the practice of purchasing a home and then using a part of that home to generate income via rent. It could look a lot of different ways. Maybe you rent a 4-bedroom house and you rent out the other 3 rooms to help you pay the mortgage. Maybe you buy a home with a detached garage. You convert it to a accessory apartment or dwelling unit. Maybe it's a walkout basement. You convert the basement to a studio apartment. There's lots of different ways you can house hack, but it is a great option for first-time home buyers to kind of mitigate those higher mortgage payments of today. And then next over, we have down payment assistance. This kind of goes back to my point of, hey, it is easier than you maybe think that it's easier maybe than you think to buy a home. In fact, using down payment assistance along with seller concessions, if you're able to negotiate for those, in some cases, believe it or not, you could close on a home for under $5,000 in this market. In fact, this top option, or this top story I have here over on the right-hand side, right underneath where it says success stories, those were some first-time home buyers in 2023 that, believe it or not, they closed for as little as $1,000 out of pocket. So it is possible, and it is more achievable than you think. Here are some more success stories from 2023. Actually, this is the same one I was talking about in the red with the $1,000 clear to close. But these are all different closings, and you'll notice that all of these are well under $10,000. 4 of them are under $5,000. And so using down payment assistance as well as seller concessions is a great advantage in this market. You don't have to wait until rates get low to get a good deal. Okay, now jumping into more of the next parts after the why. And you're getting ready to buy a home, you need to have credit. Credit history is, a record of how you manage your debt and credit over time, how responsible you are financially. You have to have established credit for a mortgage. You also have to have a qualifying FICO score, and a FICO score is a credit score that is a 3-digit number that lenders use to assess a borrower's creditworthiness and whether or not the bank should extend credit to you. So you have to prove and establish those things. Let's say your credit isn't in the qualifying range for now. That's okay. There are a lot of things you can do to increase your credit score. This could be paying down debts or balances on credit cards. This could be even adding revolving accounts in some cases, or removing adverse accounts and working with a credit repair specialist. Obviously, it's good to save and budget. when planning to buy a home, even if it's for a little while, and even if it's only a little bit of saving and budgeting is better than none. So, create a budget, put it in writing, and make simple small changes if big changes are too hard. Pre-qualifying for a mortgage. This is the process before you go home searching, where you find out, how much can you qualify for, what are potential monthly payments, and how much money you'll have to bring to closing. The lender will also begin to collect various documents needed for the pre-approval. And what to look for in a home. Well, this is a more discussed conversation with your realtor, but obviously must-haves versus nice-haves. Various things to consider. Where is the home? What are the taxes? How did the inspection go? What are utility payments? What are the size and space? Are those things going to meet your needs for years to come? And who helps you buy a home? Well, obviously a real estate agent. And also, for 90% of first-time home buyers, probably a loan officer, because odds are you don't have all of the money, or if you do have it, you don't maybe want to use all of your cash to buy the home outright, and using a mortgage to help you acquire that property. And be clear on your expectations and criteria. The loan officer and the realtor kind of orient you to the process, and it's okay for you to let them know, what do you expect in return. Making an offer, it comes down to, you want to make a competitive offer. And again, this is a more nuanced discussion with your realtor. And in some cases, the seller may not accept that offer, but send back a counteroffer. Good to be aware of home inspections. Usually this takes 2 or 3 hours, where the home you're under contract for, you get it inspected by a professional to see if there's any kind of unseen issues with the property. And once you find out what's going on with that property, if there are issues, it could be used as a negotiating tool to maybe bring the price down or get more concessions from the seller. Also just helps you be more familiar with the home that you're buying. Expenses during the mortgage, earnest money, usually you put that down at the very beginning, and that's 1% of the purchase or contract price. You pay the home inspection, during the process. You pay for the appraisal during the process. The rest is typically paid at closing, which includes closing costs, escrows and prepaids, and of course the down payment. Okay, now getting your mortgage. So what all goes into a mortgage payment? Principal and interest from the bank, obviously, but also property taxes and home insurance are typically rolled into that payment, and also private mortgage insurance, which we'll talk more about in a minute. Types of mortgages and home loans, obviously, a couple things to factor in. Amortization schedule. The 30-year mortgage is the most common, but that's not necessarily the best option. You may want to consider a 20 or 15-year mortgage as well. Then there's, typically fixed rate mortgages are more popular than variable rate. And of course, there are different kinds of mortgages you can get: VA, FHA, conventional, and a non-QM alternative type of mortgage. Those could all have their own presentation, so I won't get into those, but it's important that your lender kind of present options to you as to what might work best. Down payment, usually 0 to 5% up front. The VA allows for as little as 0% down if you have entitlement. FHA is as low as 3.5% down, and conventional is 3 to 5%. But also be aware that again, down payment assistance could help drive that initial cash requirement down quite a bit. Private mortgage insurance. So this is if you bring less than 20% down, which there's nothing wrong with that. This is an insurance policy you have to pay that protects the lender from liability if you ever default on the mortgage. And so yes, it does increase your mortgage payment, which is the downside. However, the plus side is it helps you buy a home sooner. because you don't have to save as much money. It increases your buying options and helps you reserve a nest egg or an emergency fund because you brought less money down and you kept more in your account. Mortgage application, these are usually pretty easy to complete, but keep in mind you'll also have to turn in things like W-2s, paychecks, photo ID, and bank statements showing assets you may have available for closing. During the mortgage process, you'll have the loan terms disclosed to you a few different times. The loan estimate will come to you within 3 days of getting under contract usually. And then the closing disclosure you get, at least a few days before closing. And that helps you understand what the final loan terms are and make sure everything kind of aligns with the initial expectations that the lender had set. And when you get under contract, it's important to leave at least a few weeks, sometimes maybe a month, before closing, because even though you're pre-approved, your loan is still subject to be processed and underwritten before closing, and you need to leave some time for that. Make sure that all the documents are collected and you're not going to experience any delays. So closing on your home loan, at the closing table, pretty easy. You bring typically your photo ID, you bring the money, which maybe you could send in a wire from your bank, or maybe you bring a certified or cashier's check, and you're going to review all the documents carefully at the closing table. The closing officer will have you sign the mortgage note, the mortgage related documents, closing disclosure, any other documents required. And generally speaking, this is all information that you've already seen at that point. And you get your keys at closing. So congratulations. And then, of course, you're a successful homeowner. Congrats. Remember, with home ownership, you are responsible for maintenance and wear and tear and renovations and paying for those things. So here's a list of things that you want to consider. And that kind of ties into the last point of, financial responsibility. Budget for your mortgage payment, but also budget, for more than just the mortgage, and establish a reserve. Very important for you to have some money tucked away for emergencies when you own a home. But with that, that's kind of the end of this presentation. Obviously didn't go over everything here, but if you have any questions, please reach out to me and I'd be happy to talk to you about it. If you are ready to apply, there's a QR code, or you can click the link that I'll provide in the notes of the video. And yeah, hopefully this was helpful. And if you have any more questions or want to get started on a pre-approval, please let me know. All right, thanks.